Hi everybody, it's Eddie Z here, and today is June 29th, 2024. It's around 1:50 p.m., and I am stoked because after looking through thousands of charts, I spotted this stock right here, which most closely aligns with the chart patterns that we trade here at Easy Breakouts. At Easy Breakouts, we only trade 4 chart patterns. That's it. Now check out this stock. Believe it or not, this stock is a combination of a cup and handle and a flat base. So what we're looking at here is a daily chart. And technically, this pattern is a flat base. And why I say that is because the definition of a flat base states that after a stock has had a major move up, like this one did from about 33 to 44, 33% move in a couple of weeks, and then consolidates if the correction during the consolidation does not exceed 15%. In other words, the stock doesn't correct or drop from its high point more than 15%, then that's a flat base. So this is a flat base. And the thing about flat bases is that they only need 5 weeks to form. And this one is right at 5 weeks. Now this pattern, even though technically it's a flat base, it's also a cup and handle. So it's actually both. Let me show you. So take a look at this. This is a 60-minute chart. So here we were looking at a daily chart. Here is a 60-minute chart, and you can see clearly, I can adjust this a little bit, that this on a 60-minute chart is a cup and handle. This is a cup and handle. And its stock is actually starting to break out. It needs really to get above this high right here on this day, the high being 42.53. We go 10 cents above that, and we would call the breakout point 42.63 on this stock right here. So if you're wondering what this stock is, this combination of a flat base and a cup and handle on a 60-minute, what we're looking at is symbol ULS. And ULS is a newer issue. The stock's only been trading since April, and I love newer issues when they're perfectly set up. Newer issues are a very special segment of the stock market, and I'm going to explain at the end of the video. So again, this is ULS. We are looking for this stock to break out right above here, 42.63. Now you have to realize trading is very risky. Don't just buy this stock because I said so. You should always consult a financial professional before placing any trades in your account, and not every breakout works 100% of the time. So I'm going to tell you more about why I like newer issues here in a minute. But if you would like to learn exactly how we find these stocks, these 4 chart patterns we trade, and learn a painless strategy for trading them, please join us for this week's trading event. The link is below the video, or it's in the YouTube description below the video. Also, do not hesitate to subscribe to this channel. All the best, may the trend be with you, and I will see you next week. In this video, we're going to talk about how to trade newer issues, stocks that have been public for only a short period of time. These newer issues have some very special supply and demand characteristics that make them fantastic today in swing trade. We've all heard about the hot IPO that gaps up on the first day of trading, for example, Facebook. But unfortunately, most of us regular folk have no way to participate in these deals. Unless you're a fund manager with accounts at Goldman Sachs or Morgan Stanley, you'll probably never get to participate in a hot IPO. When I was a broker, if an IPO was hot, we couldn't get any stock. And if an IPO was cold, meaning the big boys, the institutions weren't interested, we could have as much stock as we wanted for our Main Street mom and pop clients. As a trader, when it comes to an IPO, the first rule of thumb is never trade an IPO on the first day of trading. You have absolutely no basis to determine which way the price will go. It's literally gambling. And in the Easy Breakout method, we only focus on high probability trades. We're not interested in gambling. The good news is I have found a way to trade newer issues that works very, very well. I define newer issues as stocks that have been trading anywhere from 5 days to about 2 years. I love trading these newer issues because in a market uptrend, they have a tendency to go into some very strong runs. And the reason this happens is because there's a lack of supply of stock. If you think back to the supply and demand video. Why is there a lack of supply of stock to trade? 2 reasons. The first reason is that on many newer issues, the management of the company holds a much bigger percentage of the total shares outstanding than with more mature issues. And they're restricted from selling these shares for a period of time. And because they hold so many of these shares, they have a vested interest in doing whatever it takes to get the stock higher. Many times, management holds over 25% of the shares outstanding, and the bigger percentage that they hold, the less supply, and the more potential the stock has to explode when institutions come in. The second reason for lack of supply when a new deal comes public is that usually after the first few days or weeks of trading, investors who wanted to flip out already have done so, and then the rest of the float becomes tightly held by the institutions that were given the stock at the IPO price. The stock and the story is still new to these big players, and they hold the stock tightly, and they give it a few quarters to perform. When you have this kind of lack of supply, you could have some mega moves in these stocks. Let's do a quick review. Number 1, never trade an IPO on the first day of trading. It's just gambling. Number 2, newer issues that are a week to 2 years old can be great for trading. 3, newer issues tend to have lower floats. They tend to have a low supply. Management owns a much bigger percentage of the stock, and the institutions hold the stock tightly, and this creates an explosive situation. If you would like to learn exactly how we find these stocks, these 4 chart patterns we trade, and learn a painless strategy for trading them, please join us for this week's trading event. The link is below the video, or it's in the YouTube description below the video. Also, do not hesitate to subscribe to this channel. All the best, may the trend be with you, and I will see you next week.